So guys, I'm really excited to be here moderating. We've got a great panelist here today. Excited to hear about it, everything, what everybody has to share as well. So my name is Sam McDadi. For those of you who don't know me, I've been in real estate 30 years. I pretty much live, breathe, and eat it. So today's a really exciting day to hear about the development side. We're going to ask some great questions, and afterwards there'll be a Q&A, so we're excited to answer any questions for everybody out here as well too. So maybe we can start off by introducing ourselves. Ahmad, maybe a little something about yourself, please.
Hi, my name is Aslam. I'm with Zeifmans LLP. I've been in the business for about 21 years now. We are a full-service accounting and tax firm. In addition to the traditional tax and accounting services, we provide transactional advisory, business consulting, M&A. Not that everybody's going to need it, but bankruptcy and insolvency as well. Really excited to be here and answer some of your questions.
Thank you very much, Ahmad. And Mujir, maybe you can say a few words as well.
Oh, hi everyone. Mujir Muneeruddin here. I'm here for Abrahams LLP. As the introduction said, if you were paying attention, or if you won't hold it against you. But we're a business law boutique. We practice in corporate securities, real estate, construction are the primary areas that we focus on. I think one of the genesis for me being here is I think a lot of times clients, especially at an earlier stage, have very fundamental questions that may seem rudimentary, but they make a disproportionate sort of difference down the road in terms of their ability to raise money. Like it's almost like an ounce of prevention is better than a pound to cure. That's sort of things that you do early on in the setup of your company will be extremely instrumental in your ability to raise funding 12, 16 months down the road. So don't want to hog the airwaves too soon, and I'll pass it back on to Sam.
Thank you. Michael?
Thanks, Sam. Good afternoon, everybody. My name is Michael Carragher. I'm Vice President of Mortgage Investments at Firm Capital Corporation. I've been in the real estate financing business for about 25 years. 15 of those years have been with Firm Capital. For those of you who don't know, Firm Capital has been in business since about 1988. We have a mortgage investment book in excess of $1 billion. We also operate a public MIC, which has been around since about 1999. So it's my pleasure to be here this afternoon, and I look forward to participating in the panel.
Thank you very much, Michael. Maureen?
Hello, everyone. My name is Chavez, and I'm the CEO of Red Leaf Group. I started off in the mortgage industry structuring and arranging financing for small to mid-sized developers, but now I've moved into raising capital and creating my own products to service this sector. Thank you.
Great. Thank you, Maureen. So we're going to have some questions. We'll have the panelists answer them. They've made it easier for me. I've got cue cards, but there are some good questions for sure. So what is the number one piece of advice for developers who are looking for financing and how to stand out from the crowd? Number one, and maybe we'll have whoever wants to answer that question, maybe start with Ahmed and go this way.
So I think the number one issue is you have to be prepared and you have to plan ahead. Usually you find that the last minute issues, and it's hard to deal with them properly. So you have to plan ahead. Usually lenders are looking for strong results. You have to have a very solid business plan. You have to make sure if you are already in the business that your financials are in order and you are showing strong results in your financials. One thing which over the last few years have changed in this space is that there are a lot of options for you to access financing. And it may be a particular project may not be an attractive project for a big chartered bank, but there may be a niche lender who is more experienced in that space. So get to know the space and find out if you're making the right connection to the right lender for your project.
Great answer.
Yeah, I mean, I would say, when it comes to standing out and doing things on the business side, I mean, law firms will be, my firm would be terrified to think that I'm here giving advice on the business side. So I try not to get into that too much, when I'm advising clients on the law side. But what I would say, all jokes aside, look, there's a ton of reasons, whether it's your business model, whether it's your, your financials, your track record. There's a lot of business reasons why you're going to be able to raise money, right? But, from looking at it from my sort of unique perspective on the legal side, I think an equally important sort of aspect of things is, to be able to stand out. A lot of early stage companies, and I'm assuming we're talking about getting financing for the first time. So a lot of times when people first go to the well to get money, a lot of basic questions have not been answered, like who are the shareholders, like who are the directors? Oh, well, I thought it was my uncle, but I don't know if he's actually on the government registry. Or, well, yeah, I gave this guy 25 shares last year, but he might come back. Is going to be a problem? Is he going to come back and bite me because it's not on the record book? But, well, did you sign anything? Yeah, I gave him a contract 2 years ago. So things like that you really want to iron out because, in some ways you might well have a relationship where somebody likes your business or they've seen you on, some show and you've got a lot of publicity and they just want to get in on what you're doing. But most of the time, it's going to come down to a lot of, financiers are looking at it like, Fortune 500 company might look to hire people. They're sifting through 200-300, different resumes, and they're looking for the simplest reason to out your resume from the pile. So if it's something like your minute book isn't up to date, something that might seem very rudimentary to a lot of people, that might be the reason you don't even get on the table to begin with, right? So things like that, they might not help you stand out, but you definitely want to be, sort of finance ready when you go to cross that Rubicon. So that's what I would start with.
I'm assuming there's probably a lot of new players entering the marketplace that probably don't really have the knowledge, and I guess that's why a lot of people are here today as well, to learn and understand this game. So I think the better and more equipped you are, you're going to be able to get funding easier and understand the process better. Michael, would you like to add to that?
Sure, I'd like to make a couple of comments to your point, Sam. I think it's very important for new developers to take the time to actually understand the lending marketplace, whether it's with a bridge financing lender like Firm Capital or it's with a bank. So don't be afraid to go and meet with a lender, understand their lending programs. What can their lending programs do to help you be successful in your business? At the same point in time, you want to understand their underwriting requirements. What kind of information do I have to provide you to actually get a draw out the door or funding? And so I think you should also not hesitate, take advantage of that meeting, because really what you're doing is it's the start of building a relationship. And I think what you need to do is not to be shy. Don't hesitate to ask about what the business terms are that you can expect in respect to your particular financing project.
Maureen?
So if I have to sum it up in one word, it would be experience. And probably that's the biggest challenge that the new players are facing when they are looking for financing. Because when you're a new developer, especially in the small to mid-sized space, most likely you will not be getting lending from banks. So that leaves you with the alternative financing space. And even in that space, there are very, very few players, and the quality lenders that are out there are also looking for experience and a very, very solid track record. So I come across a lot of clients who have land holdings, individuals who thought that they could be developers eventually. They are unable to get financing because they have absolutely zero experience in this space. So before you even think about getting financing, you need to either go on a JV with a very reputable company, or I say that put together a very, very solid team of individuals before you're even seeking financing. The other thing that I would like to emphasize is project feasibility. I come across a lot of feasibilities, and I have to turn them down because I end up telling the clients that you're going to end up losing money in this project. And they look at me and they're like, well, we spent a few $100,000 in fancy architect firms, very expensive, reputable companies, as well as, they got their budgeting done and everything. End of the day, it is your own project, and you have to own it. So you can hire the best companies to do that job for you, but they don't know your business. And what ends up happening is that I have to tell them to go back, get the site plan amended, maybe because they were using very expensive material in what they got approved. And now you have carrying costs, and very expensive carrying costs. So whatever your profit margins were, because remember, profit margins in small to mid-sized developments are very, very low. You end up losing all that money, and now you're stuck with this land. So that's another one. The other thing I would like to say is your cost consultants. Be very, very careful in who your cost consultants are, so do your homework on that. The last point is the right choice of lender. I can't emphasize enough how important that is, because it's not just about getting a mortgage commitment. It's a very long-term relationship. And construction financing works in draws. So remember, you have to call the lender to ask for a draw, and you don't want to run into that situation, and I see a lot of that. So be very, very careful in understanding how the draw process works, who the lender is, what is their reputation in the market, what are their terms if you have a renewal, because most likely you will not end up finishing the project on time. I don't see that happening too often anyway. So you do your research on the lender and make sure the draws are very, very solid and they are done on time. And I believe firm is here, they're very good with their draws. So that's all I have to say.
Great. Thank you very much. What do you think are some of the due diligence questions people should be asking when entering this space?
So it really depends what's the nature of the transaction. So you're going to design your due diligence process based upon the transaction you're looking at. If it's an asset purchase, you're concerned about the title, you're concerned about the zoning, you're concerned about the surveys, you're concerned about the registry issues. And if it's a share purchase and you're buying a company with an underlying real estate asset, then you also have to worry about the compliance issues, because when you're buying the shares, you're inheriting all of the obligations even prior to the date of acquisition. So you want to make sure that their tax returns are done right. There are no uncertain tax positions. If there's any exposure, you want to make sure it's in the purchase agreement. You work with your lawyer to have proper representations and warranties in place that those exposures are covered. You also want to look at the financial statements and see if anything stands out, if everything is consistent. If there are any changes close to the date of sale, you want to inquire about that, why certain margins or trends are different close to the date of sale. So it really depends what is the transaction, and you want to design the due diligence process around the transaction.
Thank you, Ahmad. Mujir?
Yeah, I think so much of it is deal-centric, right? If you are, like, assuming you're the buyer, and you're going to kick the tires on, it depends on what the asset is. But let's if it's the questions that you're going to ask and the things that you're going to do, they depend on what it is that the business does. But more importantly, you want to take a step back and say, what is it that I fundamentally want in this transaction? If it's a rental property, then most of your questions should be, sort of predicated or sort of around that concept of, well, okay, so if the rental, if the yields are going to be there, like, what are some of the risk factors that could cause that to dry up? Like, are the questions that I'm asking going to the pith and substance of that? And I think, when it gets to your lawyer, I think an important thing is, somebody like myself, I'm more on the sort of M&A and corporate side. So real estate, of course, I'd have one of my real estate partners giving special sort of input on the real estate side. But regardless, I think it's always helpful to sit down, be ready to sort of have that conversation with your lawyer or your due diligence team as to what exactly it is that you want. So somebody might walk in and be like, Mujir, I know you've been doing this for some time, and you know what to look for in terms of, when you're kicking the tires, what are some red flags? But let me tell you before you even get to the red flags as to what exactly it is that I want out of this transaction. So, there's, you can take the approach that you just sort of farm it out to the professionals and say, hey, you guys figure it out and make sure I get a good deal. But I think it's, again, going back to the same cheesy adage, an ounce of prevention is better than a pound of cure, you're far better off having that conversation and saying, look, this is what I fundamentally want in this deal. I know it looks like a garden variety, your real estate, again, rental income property, but what I really want, is X, Y, and Z. And so can you, sort of dig under every leaf and make sure that I'm fundamentally getting exactly what I'm bargaining for? So.
Great answer. Michael?
So I'm going to talk briefly about the land acquisition side of the equation in respect to the team. My view would be that your planner, you need to have a very, very experienced planner who probably has some understanding of the neighborhood, knows not only the neighborhood, knows the planner at City Hall as well, and is able to determine what the development process and timeline is going to be for those lands. At the same point in time, you're going to have a good corporate lawyer that's going to understand title to make sure that there are no impediments on title to actually move forward in respect to the transaction. And then you're going to have an architect that's going to be able to, based on the density you expect to get approved, is going to be able to determine what you can build from a gross floor area, a net saleable area. So once you understand what your gross floor area and net saleable area is going to be, then you get a sense of what your cost base is going to be. So that's dollars per square foot GFA. You look at that number in relation to where the marketplace is today and see what your spread is. And then the final step is going to be when you actually put together a development pro forma, which will include your revenues and also your cost and the build out side of the equation, because you as a developer have to convince yourself that it makes sense to buy this parcel of land. And then what you're going to do is you're going to approach your financial partners, whoever they might be, your investors, but before you do that, obviously you want to be convinced in respect to the pro forma, because the land input price is the most integral part of any aspect in the development side. Because if you have the wrong land input number from day one, you'll live through that going out through the building cycle as well. Because once you get into the build out side, if you run into a slow market like we did in 2018, you won't have the ability to reduce prices to move product. So the land input price is very, very, very important. Get the best planner, the best architect, and we already have the best lawyers here tonight, correct?
That goes without saying. It's interesting because, in my world, I've been in residential resale for 30 years, and I'm just looking at developing one of our projects, one of our properties we own. So that's a little bit easier because we own the line, right? But you were trying to acquire the one beside it, adjacent to us, and they wanted crazy money because we thought there'd be obviously economies of scale buying both. But it made you realize if you can't buy it right, anything in life, then you just got to walk away, right? Because you're going to lose money then, and we're not in the business of losing money, right? So, Maureen, anything you'd like to add? Thank you, Michael.
Well, Michael took all my points, but to add to it, a very strong contingency plan because there are cost overruns and all kinds of surprises. So my advice would be just to make sure that you look into that as well.
Thank you, Marie. So now we're going to ask specific questions. Ahmad, what are some of the significant tax issues pertaining to the real estate industry as you see it?
So I'm just going to talk about any changes over the last couple of years. So one thing which we observe these days is that CRA has increased they're paying a lot more attention to this space. From 2015 to 2019, CRA assessed over $1 billion in taxes and penalties for real estate firms and real estate businesses in just two markets, Vancouver and GTA, over $1 billion in 4 years. And that pace is only increasing. The first 3 months of 2019, they assessed about $170 million in additional taxes. And
so what do they assess?
so I'll get to it. So essentially, what I want to highlight is that they are paying a lot of attention to this. 2019 budget again, the government announced $50 million for 4 dedicated real estate audit teams, again monitoring Vancouver and GTA markets. So what they're looking at, most of their recovery of the billion-dollar figure, about 60% of it belongs to HST problems, not the income tax, HST problems, which are often overlooked. There are a lot of reasons, change in the use can cause HST problems. You had the initial intention of, it's a commercial property, and then you change it to residential property. There are HST issues. So you have to be aware of those. And then I just want to briefly, quickly talk about, two court cases in this space. One is the Roof Mart, and now I think even the Home Depot was in the news, where the CRA is essentially accessing or requesting their customer database. So they wanna see who is buying, from Roof Mart or from Home Hardware. And they want to get their business numbers and names, and in order to target them for.
Does the act not kick in?
No, it went to court in the Roof Mart case. It went to court, and court sided with CRA. And recently, the Home Depot complied with CRA request back in October. So these are becoming increasingly an area where CRA is paying a lot of attention. In Roof Mart case, the issue was, again, the privacy issues, the customers, and CRA didn't even name the customers. They said, we want all of your customers who are buying over a certain threshold, so we can now see if they are actually reporting that. And the second case I want to highlight is the Wall case, which is out of BC. The taxpayer was a real estate agent, and he recently, within a short period of time, they sold 3 different properties. And the taxpayer was under the impression that those were primary residences and I didn't have to pay any tax. And when CRA did the same thing, they requested the information from the banks and as well as from the taxpayer's employer. Interestingly enough, when in the loan mortgage application, it was the income taxpayer represented was more than what they have disclosed to CRA. And secondly, the occupation on the mortgage application was real estate developer. So when you say that, and you're buying properties, now it's no longer capital gain, let alone, forget about the fact that it's not, principal residence exemption is not available, it's taxable. It's taxable at 100% rate because you are in the business of, developing real estate. So we need to, just pay attention to these developments from CRA's standpoint, and don't forget the HST implications of any real estate transactions.
And just a quick question in terms of assignments, have you seen them crack down a little bit harder, CRA? Because in the past, people could assign a deal, there's really no way to determine who is the first or second buyer, but now they've got a task of people looking for that, right? So it's a big deal now, right?
Exactly.
So listen, I think they've realized now, CRA, there's big money to be made from real estate,
Absolutely.
right? So if somebody's making $50K a year, they audit them, they get $1,000 or $2,000, it's not worth their time. But this is, as you said, it's $1 billion industry right now.
Absolutely.
So, yeah. Great, so thank you very much. Great information. Mujir, biggest challenges, opportunities for developers looking to raise financing for their projects?
So that's a bit of a general question. Look, I think I would start with saying the biggest challenge is being finance ready. And people think, well, you know what, you start a great business, you get it to a certain point, and of course people are just going to line up to give you money, right? But it's not quite like that. I mean, of course, that's a big component of it. Your prospects of getting financing are obviously enhanced by your business and your track record and whether you've got sales in a very general sense. But being finance ready is a state of mind. It's, of course, the basics are, your books and records, are they in good order? Like I always make the joke. It's kind of like, somebody. If somebody is coming to meet you for the first time who's dating your daughter, they come knock on the door and they look like they don't have their stuff together, that's not going to bode well, and you're not going to you're not going to get a great first impression. Well, I mean, a lot of times financiers are, they have even less to go on, in terms of whether or not you're a suitable candidate for financing, and if your stuff isn't in order, you won't even get past, as I mentioned earlier, past that first round. But I think fundamentally, being finance ready and being ready for the due diligence and the questions that are going to come at you, I think you got to take a step back and understand your financing strategy. Like fundamentally, what is it that you want? in terms of financing, right? Like it's kind of like if you have to know what your value proposition is. What is your ask? What is your valuation? What is your price per security, or what sort of collateral are you going to give to the buyer or the investor, right? And of course, a big sort of corollary to that question is, well, do I want equity financing? Do I want sort of mezz debt, like something in between? Do I want pure debt financing? Because that's going to determine what aspects of your sort of portfolio of your business need to be beautified and ready, or I guess manicured would be the proper sort of verb, an adjective, to be ready for that exercise. So for example, if it's going to be debt that you want, then you know what, books and records are great because there's something that the lender is going to check off, but they might be more concerned with security, whether debt servicing is going to be an issue. So understanding that, going into that, you're going to have those answers ready. You're going to have your books, records, or financial statements ready, your business plan ready to answer those questions, right? And it fundamentally comes down to long term, do I want to be raising debt financing where I'm going to have a periodic payment and it might crimp some of my cash flow for the next 2-3 years, or is it equity financing where I'm going to share some of my pie? So another question is like, is this person that's going to be bringing in the money, are they growing the pie so it's not just me sharing something with them that I could have just gotten the money from a lender, So fundamentally, sitting down with the professionals, understanding your financing strategy, and just like everything else, like what is it that you want from life? What is it that you want from that round? And another thing, I see this all the time, you might see some sort of a presentation deck, you might see a term sheet. It comes across your desk like, hey, Mujir, take a look at this and let me know if you like this company or if you've got any clients that might be interested. And then a year and a half later, I see that same term sheet for that same company. It's like they've been in this perpetual state of financing for the last 18 months. And I always say, look, when you go into financing mode, it's kind of like, think of it like you're going into your treasury to issue securities. It's kind of like walking into your bank to check your safety deposit box. You don't open that thing, leave it open, walk out, grab a smoke, go grab a beer, take a look around, and then come back and be like, oh yeah, right, I was doing this, yeah. I mean, you open that, you look around and make sure nobody's there, you keep your eyes on your fries, you get what you need, you shut that thing, you lock it, and you go on to more important things in life. So that's, I guess basic advice. If you want to go beyond that, I'm happy to chat after the fact, but that's what I'd say off the top.
Thank you, Mujir. We appreciate that. And I think, as I'm listening to everybody here, building a good team with great, capable people like this is really important, especially if it's your first foray, to make sure you have the right team. I think you can't underestimate how important that is. Michael, what opportunities do you see in the marketplace for small and mid-sized developers today?
I would say that there actually are a lot of opportunities in the marketplace today for smaller developers. I think that the reason for that is because I think that newer developers, they may lack the experience, but they have an open mind in terms of what the possibilities may be. If you look at the Toronto housing market right now, the good news is for new developers is the fact that we have supply constraints, whether it's rental product or it's homeowner product. If you look at the numbers in terms of what's taken place in 2019 in the Toronto CMA, there were 16,000 condo completions and purpose-built rentals. 3,500 of that 16,000 were purpose-built rentals. The low-rise market chipped in 11,200, so you have about 27,400 units. Put that in context in terms of the population increase that we've seen in Toronto in 2019. We had approximately 120 to 130,000 increase in the Toronto CMA. CMHC is forecasting that number is going to go to 139,000 in 2020. So what are the opportunities for small emerging developers? If you look at the go-to existing neighborhoods where the populations are decreasing, I think the planners and the city want more intensification. Challenging to do, but if you're an infill builder, I saw this in an established neighborhood not far from where I live, a small builder bought 2 50-foot lots, and the neighbor was 40, 50, and 60-foot lots. But they were successful through the Committee of Adjusting, severing that 100 feet and getting 3 33-foot lots, to their credit. And there were some people from the development business that were actually fighting against them. Secondly, their laneway housing is starting to get more support in the city. And thirdly, if you look at, not everybody can go out and build an 18-story purpose-built rental concrete building, but we need smaller rental as well. I have a client of ours who has a good nose on the acquisition side, just purchased smaller project, but 2 100-foot lots in the Dufferin and Eglinton area. So his plan is he's going to build a small rental building. So I think is that the opportunities, if you focus on transit nodes, whether it's subway, LRT, GO trains, that's where we need more housing intensification. Thanks.
Thank you. Great answer. Marina, I know we asked the question before. Is there anything you want to add to your points? I know this was talking about the challenges in the industry. If there's anything else you want to add, or
I'll just add, come to us if you're facing a challenge and we'll make it happen.
yeah, great. That's, I think, good information. Okay, this is for Michael, I guess Marine and Ahmad. Please describe the threshold for proper financial reporting for emerging developers who are private, closely held, but are considering getting into the banking or capital markets.
In terms of the threshold, I think for the financial reporting, right, one should be aware, there in Canada, where generally speaking, there are 3 kinds of financial statements you can obtain from your accountant. There's the basic one is a compilation engagement, and you are just essentially compiling the internal financial data and presenting it in the financial statement format. And usually that's good enough if you are just, using those statements for compliance purposes and you are not, going for external financing. But as soon as you start looking at the institutional investors, lenders, then you need to upgrade your financial statements, either review statements or audited statements, and you have to make sure that you are complying with the accounting framework and they are consistent, and lenders can use those and compare it to the industry and get a useful, meaningful picture of your business. So there is no hard and fast kind of rules, but you have to make sure that you are providing lenders the statement, what they are looking for. So if you're not ready, plan ahead, make sure that you inquire about their requirements, and based upon that, you talk to your accountant, make sure that your statements comply with the requirements lender has.
Thank you very much. I'm being flagged here. It's almost Q&A time, but we're here afterwards if you have any questions as well.
Sorry, guys.